Hello everyone, welcome to another weekly market review. It is the 15th of June 2020 and we are in a very interesting place, a potential reversal in both crypto and the traditional markets. So let's have a look at what we can do this week. So here we're looking at the total market cap on the weekly time frame. I'm highlighting one significant level, which is the VWAP of this entire range since BTC has gotten here. Essentially, the breakout, for the point that made the all-time highs. It's a very well-respected VWAP, which just in terms of the market, is dividing the market into places where bulls are in control and where bears are in control. And you can see that on a higher time frame, last week's close is pretty decent for the bears, suggesting that we do get a test of a major level. And in terms of the VWAP and the previous monthly open, this 241 is a pretty big level that we should be looking at. Again, the weekly close is something that favors the bears right now, and we have on the daily time frame again a couple of key features. The VWAP again from the May move, you can see that we broke down, closed below it, and we retested it as resistance, and we were kind of flipping and flopping between essentially the VWAP from the top that we had for BTC in May, because each time we were flipping this into support, it was still showing that there is a possibility of heading back in the upside direction. But you can see that just today we have closed below it on at least a 4-hour candle, and currently the next area of interest is the high time frame VWAPs, which is again the October VWAP and also the April lows, because these held pretty well for the total market cap. So these are the most immediate areas of interest, especially the 241. And essentially right now the theme for cryptocurrencies has to be dependent on the traditional markets. Once we get into the BTC chart, we can look at that. But for now, if we look at high time frame areas of interest, it is this 241 level, which does look like something which is which has a decent probability of giving some kind of reaction. But just in terms of structure on a higher time frame, the weekly close on the total market cap is not the best if you were to be looking for upside. Nonetheless, until this level is broken convincingly, we should not be looking at other key levels. You can see that what we were looking at was on higher time frames last week. We were looking at the levels which have had support for a longer period of time, and essentially we have, after this 241, the next area of interest is this 225 to 220 level. If in case this is lost, this is a big area of interest, and the next ones we were not ready to consider yet as of now, but essentially it is this 180 level. So if this 240 level is lost, I do know that there's a couple of levels which are here before this, but the big area of support from which a bigger rally can be made should generally be where we've had price spend a long period of time. And you do know these levels on total market cap, they work pretty well. So I would say this 241 level is quite critical, and if price is not able to hold this on a higher time frame closing basis, then we have a very different narrative for cryptocurrencies and the way this market has to pan out, because we do have 225 as the next big level of support. But essentially then what this does is this gives us a reflection of the macro climate, and it also gives us a potentially fundamentally twisting aspect of the fact of how miners would have to be able to deal with this current situation, because if price does start coming to this 225, which means we have essentially easily another 10 to 12% drop. We're looking at 8k sub 8k levels for BTC, and if you look at the mining break evens, this is something for the miners to ponder about. If price is going to such a discount, how it is the macro factors for cryptocurrency take place, and how it is that the macroeconomic factors are going to be affecting this industry in the long term. So still a very interesting point for all markets essentially, and especially the crypto market. We did have a lot of So yeah, 241 looks like the level to watch right now. It is possible to get a reaction. We will quickly look at also the altcoin market cap, but eventually the more interesting chart now would become BTC and what it is doing along with the traditional markets. So looking at the altcoin market cap on the weekly time frame, and you can see again that the previous week's candle is not so great for the bulls. And if we're looking at levels, first of all, we do have this level around the 80 billion level, which is pretty significant demand. And but just like the total market cap, another 10% lower, we have this very big level on the total on the altcoin market cap, this 74 billion 75 billion level. You can see previously it held for a very long time as support, and it did so in May as well. So if we are to come down, that is a very significant level that lines up with the 225 billion level on the total market cap. But that is a scenario we should be taking into consideration only if BTC is to break this 8800, the 8800 8900 support that we are currently at, and that would suggest that we are getting a move on the altcoin market cap again towards this big previously tested level, where I think there is a significant amount of support. If we're looking at the daily time frame, another very significant thing that has happened is we have this long-term channel that was holding since essentially March, which has broken down for now. We had not made a daily close below it, but currently the way the market conditions are set up, it does look likely that we are going to get that break of a channel. Essentially is reflecting a lack of trend, and the strength in this trend has now dissipated. It is pretty evident. So keep looking at the levels, guys, because this 80 billion is pretty significant. And though if price is not able to test this and hold this, then we should definitely be looking at this 70 to 75 billion, which is a key level. I think I would not like to see price to break down below this. Essentially it opens up for a much bigger move to the downside. So I think this is the big level for the bulls to defend, 225 on total and the 75 on the altcoin market cap chart. But for now, for the mid time frames, it is this 80 billion level, which is significant. So for BTC, we're going to be discussing a few scenarios. After this new information for the weekly candle that we have received. Essentially, first, just on the weekly, you can see that the weekly closed, even though it was on lower volume, it has closed weaker than the previous week. It was an engulfing on a closing basis. What we have is we have a strong level at 8600. You can see the 4 weeks that did not close below this, so this is quite significant, in terms of what BTC has done. And this is the big level for BTC to defend, and this is the big level for BTC to break, for us to really start looking at some big levels. Another very significant thing is we have closed the weekly below the monthly open. So if there was a safer scenario to be looking for upside, you would want price to close at least a daily candle above the monthly open to signify that there is a potential for continuation in this rally, or if this consolidation is going to be not a distribution. This is a big sign. This monthly open is what needs to be reclaimed on at least a daily closing basis. But for now, since we did end up closing the week below it, this is significant, for potential to test some major support levels. We're going to look at the support levels. So for the weekly time frame, it is 8700, but this 8630, the monthly level, this is the most significant higher time frame on a weekly. And if you look at the daily, what I'm showing you below here, this is the correlation between BTC and the Dow Jones Industrial Index. And what you can see is that we have, at least over the last week, gained a significant amount of correlation. This is significant positive correlation between the BTC and Dow. So what you want to understand is that it is more likely that the global markets, and it's more likely that the traditional markets that are going to define the directionality for BTC right now. So it is very essential for us to be able to chart that and find good levels on that, to create a confluence for what we can see in BTC. So for BTC, you can see that after we broke up and made this move to 9500, we have been in what you can call a sideways range. So what can happen is, on a high time frame, the direction which we break out in this range should essentially define the volatility which needs to expand. So being in this range for more than a month and breaking down below it would signify that the market needs a much longer time than what everybody has been defining. And like I said before, this is really going to be challenging for the miners. Even if they are hedged up here, it will be really challenging, considering the average price of mining a Bitcoin right now post the halving. So this is a very, very critical range. Currently we are still within it. Price is not outside of it. I would say that if we start closing below 8600 on a daily time frame, you can say that on a closing basis we are out of this range. Until then, this is still a range, and we are approaching close to the bottom of the range. So if you are playing this as a range play, this is close to the bottom of the range is where you should be interested in buying, because this would be the best place to be managing risk for upside. Now we come down to the 4 hour. So on the 4 hour, what I have is a couple of very interesting VWAPs. One is from the April bottom on BTC. This was a very impulsive bottom, and essentially it is the one that created this big move that we had to 9500. And you can see that this VWAP has been very significant. The bulls have been defending it all the way since we broke up from it. So for on a higher time frame, I think this is the good place for me to be gauging whether it is the bulls who are actually in control, or they have conceded to the bears. So you can see currently we are right at the VWAP and testing it, and this is the third higher time frame test for the VWAP. And you can see the last two tests were very significantly defended. So it is very interesting. I think this is the place for bulls on a higher time frame, because this is refining this 8600 level a bit more for us currently. So for me, this is the big level for price to be defending, and this is the place. Also, this was a confluence for our target. This was the channel target. I had shared this in the Discord. And basically we tested the middle of the channel, and tested it as a resistance again. And essentially, the first target, if this happens, the price breaks into a channel, test the mid and test the top as resistance, is a good place to be managing risk. For downside, where the first target remains the middle of the channel and the second target is the bottom of the channel, both those targets would be achieved. So there is a slight confluence over here as a take profit of a channel trade, and also the higher time frame VWAP. So for BTC, I would say this is a very significant place. This is the level to be defending for bulls. It is a bit more refined for me from this 8600 level, so it's a nice place to be managing risk. But nonetheless, even if we are to wick, this is the level that you as a bull want to see defended. And I would say if this is taken out, then the next big significant level is the yearly pivot and the long-term anchored VWAP for BTC, which is the 8150 level. The yearly VWAP being slightly lower than that. So this would be in confluence with the 220 225 level on BTC, which is a great place to be managing risk on the total market cap. But nonetheless, it's also a very significant level for BTC. So a very interesting place, I would say. On now, what would be the medium time frame? This would be the level to be managing risk if you're looking for upside. And if this VWAP starts to close to break on a closing basis, essentially you can see we have had no 4-hour closes below this. So that would mean that the bulls have conceded for now, and BTC is heading into creating a pattern which may reflect that we have some longer time frame consolidation patterns to play out. And we will discuss the other couple of scenarios we have on BTC. So basically for BTC, we should just be aware and discuss the 4 scenarios that are potentially possible. One is the bullish scenario, where this current level that we were looking at, essentially the higher time frame VWAP that's been holding, that this level holds, and eventually, essentially we start a slow grind from here and end up closing above this monthly open and eventually grinding up to make new highs. That is the one that is in correlation with the fractal that we had been looking at. It is the Amazon fractal on BTC. You can check our Twitter if you want to look at that. The second scenario is a ranging scenario, where again this is the level that is essentially carries on holding and BTC goes sideways from here. We have a scenario which has a medium term downtrend, and that scenario activates if these levels, the 8600 level, is broken, and eventually we end up finding support between the 8k and 8150 level, which is the 225 level for the total market cap. And one other scenario that we need to keep in mind, essentially that begins to manifest if the 225 level on the total market cap doesn't hold, and we end up getting a retrace all the way back down to the 180 level, which will not be so nice because the altcoin market cap then does not have many levels below that where price can find a longer term support. So essentially the midterm downtrend scenario, where 225 on total market cap and this 7800 to 8100 on BTC, these levels end up holding. This would be a decent scenario which would suggest that it is not an extremely long-term correction. But the last scenario that we want to keep in mind, and essentially I think you would see it much more clearly if we have a line chart, is this scenario where we are forming, and on the weekly time frame, another lower high, and price does end up coming down to really steep levels, and we get a longer term correction on BTC. And essentially this would be very, very challenging for this entire asset class, so this is another scenario. I mean, it eventually opens up. I think if this 225 on total market cap is lost, this 78 7900 on BTC is lost, I think that scenario is something that you would eventually want to start thinking of once price does that. So we take it level to level and a step at a time. Currently we do have a place to manage risk. Once price does If price does come down to 8600, it is another place to be managing risk. This level is lost, you can trade it down to this 7900 to 8150 level, and if that is lost, you can be looking at a much higher time frame correction on BTC. So we have pretty clean levels over here, and a game plan for if price stalls at each level, and places to be managing risk at each of these levels. And also we have the condition for which to be looking at longer upside, which is the reclaim of the monthly level for BTC. So quick look at what odds are doing. We have small caps, mid caps and large caps here against BTC, overlaid with BTC against the dollar. And what we want to see is from May, you can see that the small caps were the ones that actually led this move. It was small caps that broke up first, and then it was followed by the mid caps, and it was the large caps that went last. This was pretty significant that we actually got the breakout in large caps the last, but we broke down on the large caps. Now we just zoom in a little. So we large caps actually topped out first, and you can see that we are actually moving down much earlier than we did for the smalls and mids. Essentially the small caps still haven't made any lower lows. You can see that the mid caps have already made lower lows. The small caps are yet to make any lows. This is the low that made the high. We haven't made any lower lows, but large caps they made a lower low on the 8th of June, and essentially we've been trending down since then. So we've broken lows here, and then we've broken lows here again. So large caps have been trending down, and it topped out at the starting of June. So that is something very interesting to have been watching. All the while BTC was going sideways and smalls and mids were moving pretty strong. So we look at large caps against BTC over here. I did mention last week that this is a very big resistance, this monthly level, and the bullish case scenario for large caps against BTC was if we were to find support over it. You can see that all of last week we held this as resistance and we were slowly grinding down. Now we've made a couple of impulses down. So what you can see is that essentially this is the high that has created these lows on large caps against BTC, and we've made a lower high. So on a medium term or a longer term time frame, there is nothing over here that suggests that we are to be going for upside. So nonetheless, if you were still wanting to look for a place to manage risk, there is this 2020 yearly open, which has a confluence with the golden pocket. So if this was to hold and we end up making higher highs, and of course eventually breaking this high, then we have a scenario for a longer term trend to starting to open for large caps against BTC. But for now we've basically been going sideways, and we have made a lower low. After the high that made the low, we've made a lower low. So this just suggests that this market structure on a medium time frame is still bearish, and there is still a probability that this large caps against BTC, it breaks down from this overly testing support. This possibility is still open for a very short time frame. If you wanted to manage risk for some kind of long trades, you would be managing it from here, but the market structure is not very fantastic for these large caps against BTC pairs. They have been significantly underperforming the mid and the low caps as well. So this is something important to keep in mind. Essentially now we're just looking at the dollar values for the total and the BTC. And what we want to see is that once BTC turns, whether large caps against BTC, they're going to have any correlation with BTC USD. Because if you have been following us, we have been talking about what last time BTC did after its halving. We consolidated, large caps got a bit of a bounce, also against BTC got a bit of a bounce, and eventually BTC moved on its own, while alt BTC bled even further. So if that scenario opens up, then these lows should get taken out. So in terms of alt BTC, I think what is most important is to monitor the correlation. And for now, what you need to understand in terms of market structure is that there is weakness here. If inverse correlation gets activated once BTC USD gains strength, then you would expect this to get broken down and for alt BTC to make new lows. And the other scenario is once BTC gets impulsive, if you see alts against BTC are following, then it would be wiser to be in alts. But for now, I think if we are looking for upside, we're looking for places to manage risk, those should be more with BTC, considering alts against BTC is weak. So we're looking at the Dow Gold over here for traditional markets. And a couple of things I want us to look at is, first of all, this complex head and shoulders, which we broke down. And last week we only tested it back as resistance. We also back tested this big weekly level that was the base which eventually led to the high. So we tested that as resistance as well. So I would say on a higher time frame, if we were to concur what would it mean for this market to have strength, is once we reclaim this level. It is very essential for price to this ratio to reclaim this level for the market technically to have some decent bullish structure. And this is the big reclaim for this ratio, the Dow Gold ratio. Essentially. And another thing was that gold was holding up this whole while the market was grinding up on low volume. So this is very significant. I think this 16 level on Dow Gold is going to be very significant going forward, and this is the level which would really define the higher time frame market structure to form a risk on shape. So looking at Nasdaq on the daily, and since we topped out around the 8th of June in the S&P, essentially the S&P has been going sideways since early June, I would say around the 5th, while some money did flow into the Nas, but essentially everyone was hiding behind the leaders because that tech had been the leader until we got that bottom bounce in financials and a few of the sectors that have been hit hard with the virus. So all of that money moved back into the leaders, and that happened over the last week. And even on the drop, currently tech is the strongest. And what we were looking at was we looked at several factors which were defining that potentially this has been the 23rd March bottom is potentially a long-term bottom. And a lot of the statistics, what they were suggesting was that we don't get a drop which is further than about 14%. 14% was the medium average for a sample size of 8 or 9, which is essentially not such a big sample size, but nonetheless it is significant. So what I would say is the bullish scenario would be, I think, a reclaim of this daily block. This is a very significant daily block. This was the one that we were looking at. It was previously resistance, and as soon as we did find support over it, it opened up the potential for this rally that we got in the Nasdaq. So you can currently see that we are going to be closing a daily candle below this if we do end up closing where we are at the levels that we are. If that does happen, the next significant period of interest is the weekly block that made the high. So if this weekly block is where we can get buying attention, it is also in confluence with the VWAP from the breakout of this April move that we got on Nasdaq. So this is the VWAP that got defended previously in mid to end April. So if we do end up breaking below this would be the next significant area of interest. And I would say that if this is again something that does get challenged, the VWAP since the bottom, which is also pretty close to the VWAP since the big Feb top, this would be the next big area of interest. And I would say that this is the big level for the bulls, and if this is what they're losing, then we're looking at a very different and complex structure. Essentially, this would mean, Nasdaq went to all-time highs, but the Dow and the SPY did not. So this would mean that it is a much steeper and a longer correction for the markets in terms of its scale and also in terms of its time frame. But if this is the long-term bottom, then you would expect at least these levels, these VWAP levels, to be defended, the higher time frame levels. And depending on the aggression of the current market, we would have to see whether it is quickly this daily level which can be reclaimed, wherein would be a nice place to manage risk, or we watch price come down and watch what happens once we interact with the medium term VWAP right here. Quick look at some statistics. This is to do with the most volatile years in stock market history, and what we're looking at on our y-axis is the cumulative count of 1% days in the market. And you can see that we are already tied for the 6th most volatile year, and the general trend has been that this volatility does end up continuing, so be prepared for that. Be prepared for high volatility if you do trade options. This is again quite a significant statistic. So nonetheless, this is 2020, guys. It's gonna be a very, very interesting year. If you thought the front end of the year was exciting, this is proving that this can just carry on. So it's a very significant statistic in terms of volatility. So what we're looking at right now is the Vix. So this is the Vix rate of change. This is the percentage change for the Vix in one day, and what this red line is signifying is a single percentage gain for the Vix. And what we saw was a single day percentage gain of about 47%, and a back testing strategy has shown us the return for the S&P 500 once the Vix has made a move like this. And what you can see is we have 1 2 3 4 5 6 7 8, a sample size of 9, and essentially this is the 10th time. That's not a bad sample size. And what we can see is the 1 month, 3 month, 6 month return, and I would say we should look at essentially the 1 month or the 3 month returns right here. And what you can see is that in both the cases, what you can see is in both the cases we have only a couple of times, most significantly, let's look at the 3 month, we have only 2 out of 9 where we've had negative return, one of which has been 2020 and the second one was 1990. And the other thing you want to see is that we did this twice, 1990 and 1991 as well, like just 2 times in a row. The first time we did get a negative return, and the second time we got a positive return. So this is another statistic that is pointing to a lot of similar statistics the last 2 to 3 weeks that we've discussed in our weekly reviews, which point to this to this March bottom being the long-term bottom. So this is another statistic that is still pointing to that there is a decent amount of potential that we get a long-term bottom on the traditional markets. And what we get right now is a mid-term correction which is going to be buyable. So we are looking at carefully the levels. The confirmation for upside would be that reclaim on the Dow Gold Index, and the big levels on the Nasdaq are what we marked out with the VWAP levels in confluence with the weekly level. So let's keep a close eye at it until the longer term VWAP levels that were marked out on the Nasdaq, until those are not taken out. I think this statistic would end up again giving more substance to the fact that we are looking for a midterm bottom, which would be a kind of a consolidation shape and would be buyable. So here we have the analogs of all the previous times that we could compare, that the beginning of new bull markets, and the closest analog currently we have is to the 2007 market, and essentially it was again at the same time, June to July, when we had this price action on the S&P 500. So if we look at those analogs, we do have the potential for getting that sideways and of course a decent correction, which is again not pointing to even going close to new lows. The last couple of, you can see the other gray as well, which is there. So the last couple of analogs that we have do not point to making new lows. The one that is closest, we have the 2007 analog, that suggests that that June and July end up being sideways or corrective in nature, wherein we do get this at this time, the percentage of correction points similar to what we are looking at in the Nasdaq. We're looking at the dollar, the relative dollar, and even though this is essentially a full retrace from the big impulse that we had, and this is the level that we were looking at on the dollar, the 1.18 on the relative, for this to be holding, to make a case for a continuation of this big level that we have been speaking about over the past couple of months. But what we did get is a complete retrace and a breakdown. And if we go down to the daily, what we were looking at was a point of reversal over here, which was going to be which really helped us to time this correction in the traditional markets. So we did end up getting that reversal, and the big area of interest again now for this to find big resistance is this 1.7 1.8 level. And I think since we have inverse correlation between the dollar and the traditional markets right now, so this would be very significant for us to put a finger on where the next resistance for the dollar and where the next support for the traditional markets, which are also very much in line with crypto right now. So that currently points to this is the big level, the 1.71 level. So here you can see we made that stop run, and since then the dollar has been moving up, and I think the markets would be getting very complex if this does not turn into resistance and we end up moving further up. But this would be the level which would be in confluence with that weekly block on Nasdaq, and if that is true, then essentially either the 8600 or the 8100 on Bitcoin as well would be the level to be watching, the 225 level. So let's look at what happens once the dollar hits this big level of resistance. And for now, this was very key. The relative dollar chart was very key for us to be able to give us a good hint as to what is happening with commodities and everything that is pegged to the dollar currently, because these are very big moves, for the dollar generally, which spends quite a few years in such kind of sideways moves. You can see that these are very big moves, and essentially they end up repricing a lot of assets along with it. So I think this is something very important, and this is something that you should be keeping an eye on, especially when it is so volatile. So we're looking at gold right now. This is on the daily time frame, and this is something that is suggesting how strongly the dollar is influencing everything, rather than just a risk on and a risk off, where gold is to be moving up when it's a risk off climate. you can see that the dollar is repricing the gold, its ratio in gold as well. Wherein even though the markets have been selling off, we are getting a bit of a sell-off in gold. So what you should understand is if the dollar continues to get stronger, it is possible maybe that gold continues to get some kind of weakness. And I would say that if this yearly level on gold, this has been the level where we've been managing our risk for any long side. If this gets taken off, then we would have decent confirmation of a continued risk on environment. On the other hand, if this quarterly level is what is getting taken off, then I would say that there is a trouble brewing in the dollar. So I would say the gold chart, the dollar relative chart, and looking at the indices, these three are currently the key factors which you can keep a lookout for their correlations, and keep a lookout for the key levels that can define what is to come in the future. But for now, it's not looking overly strong gold, so it still does reflect that the potential for a continued risk on environment is still there. And I would say that once this is lost on gold, this big yearly level, this would add confluence to it. So just keep a lookout on these three ratios, guys, and keep a lookout at their correlation, and this will really help you to gauge and to signify what is to come. And especially even if you only trade crypto, I think these pairs are very important, considering the very, very strong correlation that we currently have with the cryptocurrencies and traditional markets.
If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!